This is the briefing for Friday, September 13th. Well, certainly this week, the indices took the CPI numbers on Wednesday and the PPI numbers on Wednesday as very good news, and the trend is up. We have a Fed announcement on Wednesday of next week, so it's going to be interesting to see what happens after that announcement. I know the market is anticipating a rate reduction. The amount of that is yet to be seen, or if there is going to be a rate reduction, but that's yet to be seen. What we do have here is we have a couple things that are going on with the indices, and I want to point them out. First of all, typically the 2 days prior to a Fed announcement, there's typically rotation. Unless something else happens, that's typically a pause in front of that announcement that the market will just basically anticipate waiting for it and then determine whether value is going to be higher or lower after the announcement. And then a lot of times the comments by Chairman Powell afterwards will move the markets as well. So I have some other things that I want to say about the Fed announcement, but I'll do that next week in the briefings during the week. This is the weekend briefing. So basically, you can see here, we had basically 3 days, Wednesday, Thursday, and Friday, of really good movement. This is the spiders on a 60-minute basis, traded through resistance at 555. Qs did the same thing, traded through resistance at 470. And the Russell gapped up, of course, today and followed through with that as well. And you can see here that the Russell from Wednesday and Thursday had a decent day, although it was not following along. Now, I'm going to point this out, but I'm a little skeptical of the results of it. First of all, is that look at what's happening with volume. Volume in the spiders is falling off. Volume in the Qs is falling off. And while we did get a spike at the open today in the IWM, volume fell off for the rest of the day. Volume was very low on this rally here, and it didn't appear that the Russell, the IWM, was going to really follow along. That's one thing that we need to keep in mind. Now, typically, as a market comes into a key reference area, volume will fall off as traders step back and try to determine whether value is going to be higher or lower, whether there's enough strength in the market to continue the trend, whether it be up or down. So, and we are approaching intermediate term key reference areas in all of the indices. So it's, and also we have the Fed announcement coming up next week. So traders typically will step back and you'll see volume fall off. This was very strong in terms of price development. That's easy to see from the candles and the way they just continued to move higher with each hour, since these are hourly candles. Now, the other thing I want to point out is breadth continued to improve through the whole week, from Wednesday into Thursday and then into today. So you can see breadth continued to strengthen. Breadth continued to strengthen, and breadth continued to strengthen in both the NASDAQ and in the Russell. So this was supported by the internals strengthening to support this move. While volume began to fall off, and volume is a key, we have to keep in mind that it traded through a short-term key reference area and then approached a longer-term key reference area as well. So as we look at the longer term chart, the daily chart, you can see what's happening here. Now you can see this is breadth on a daily basis, so you can see how it was strengthening all through this week. So this whole rally was this week, with the majority, or the biggest move came on Wednesday after the CPI numbers and the PPI numbers. Now this is the crux of it here with the spiders, and a little bit different with the Qs and the Russell, but you can see this 565 area, 564, 565 area, we're approaching that. We had a double top. We'll see if we get a triple top and see if anything occurs from that. But it was, like I said when I pointed this out, I think it was a couple briefings ago, that we have a double top, but they're never double tops until we see the move away from that and a potential larger move back to the downside. So we have to be aware that we are approaching this upper key reference area in terms of a longer term resistance area. So that's typical for volume to fall off. You can see volume falling off in today's trading. Now, if we look at, this was Wednesday's trading, so this is volume on Wednesday on a daily basis. So you can see Thursday's volume fell off and today's volume fell off even more. 52-week highs minus 52-week lows is improving nicely along with market breadth. So other than volume, which I'm not going to give a lot of credence to, and I give a lot of credence to volume. Other than volume falling off, the market internals are supporting this move, moving into this key reference area. Now, I want to qualify that because certainly, depending on what the Fed does, it can change the perception of value, and we could see everything that we saw in this move this week completely retraced next week. So it's really up in the air as to what happens on Wednesday. I think it's at 2 p.m. Eastern time. Now, this is the Qs. So you can see the difference, the intermarket divergence. So you can see the spiders testing this all-time upper high, and the Qs, NASDAQ, not even testing this 400 area, which is the next level of resistance, this side here. So it is quite a distance away from this 504 area, 505 area at 475. So it's got at least 30 points to go before it would test this all-time high. So there's an intermarket divergence there as well. You can see, and this is the same thing with the spiders, I neglected to point it out, but you can see on this move to the downside, you can see how volume is trending up, and I think I covered this in the briefings. Then, of course, we get a decline in volume. Then on Wednesday, we get the spike in volume, and Thursday and Friday, volume falls off once again. But I'm giving more credence right now to what's happening with breadth in the NASDAQ, over 2,100 shares positive. And in the Russell, we have basically the same thing. Russell volume was trending higher, then fell off going into this low. And then for the last two days, volume has increased. Volume in the IWM has increased where it did not in today's trading, where it did not increase in the other two indices, but breadth has exploded in the IWM. So basically, what we're looking at now is that upside resistance in the Russell is at 223. Support comes in at 215. Going back to the Qs, resistance comes in around the 490 area, and support is at 470. And then in the spiders, resistance is this 465 area. Support comes in at the 555 area. So those are numbers to keep in mind for next week, especially after the Fed announcement. Now, we have reached a point of being extremely overbought. You can see this is the NYSE, this is the NASDAQ. So it is typical for a market to pause or have some type of a rotation away from the main trend, which would be to the downside, and then consolidate to work off some of this extreme overbought condition before we see the potential for another move higher. So it would not surprise me. We got the Fed announcement on Wednesday, and it would not surprise me based on the overbought condition of the market to see some type of a pause or some type of a potentially even slow rotation back to the upside. Total volume on the NYSE, you can see that fell off over the last couple days. Same thing with the NASDAQ, total volume falling off there as well. But once again, the internal structure with 52-week highs minus 52-week lows and market breadth in all of the indices expanding so nicely, it's hard to critique this rally. Now, you did see the intermarket divergence between the S&P 500 and the Russell and NASDAQ. We never know how intermarket divergences are reconciled, but the S&Ps certainly have been showing a lot more strength than the other two indices as well. Looking at where we are in terms of 52-week highs, the percentage of stocks above 50-week moving average and the percentage of stocks above the 200-day moving average, you can see that is expanding nicely also. 200 just breaking above trend. In the NASDAQ, the percentage of stocks above the 50-day moving average holding above trend. Same thing with the 200-day moving average approaching trend. lagging slightly. And then in the Russell, you can see holding above trend in the 50-day moving average and holding above trend in the 200-day moving average. So in summary, we've basically got a market from an internal perspective that is strengthening. Volume is declining, but volume is declining as we approach the end of the week. We approach the release of important economic news at the middle of next week, and we have approached important key reference areas in all of the indices. So basically, it's going to be important to maybe sit on our hands on Monday and Tuesday unless we see another breakout with volume increasing. But certainly expect a lot of volatility on Wednesday, especially in front of that Fed meeting and then the comments. Have a great weekend, and I will pick this up on Monday for subscribers.